Welcome to the Asian Connection Mortgage Podcast, where we connect Asian Canadians together to talk about anything related to real estate, mortgages, and finances, based out of Vancouver. Our host is John Lee, mortgage broker with Arise Mortgage. Grab a bubble tea and enjoy the episode.
Welcome everyone to another Asian Connection Mortgage Podcast. My name is John, and today I have a special guest with us today. His name is Joseph Tang, and he is one of the 150,000 people in the world who have the Chartered Financial Analyst designation, also known as a CFA. He's been in finance for over 17 years now.
And counting.
Yeah, and investments, wealth experience. So I'm so glad that you're here with us because lots of people are wondering what's going on with the real estate and equity market as well.
Yeah.
So really excited to hear all your thoughts. So wow, 17 years. Like for those who are listening to this through podcasts, like he looks really young. He has like the Asian genes. So if
The Asian genes,
I
yeah.
say like 17 years, people would think you started like since kindergarten or something.
Yeah, the Asian genes, that's it works out well for us up until a certain age, and then it just overnight we turn into like, yeah, not so good, right? So
Yeah, just like who are you? Like no one will
yeah,
recognize.
exactly.
So yeah, thanks for joining us. Before we start,
Hmm.
um, I want to ask a few icebreaker questions
Absolutely.
to make this a little bit more fun. Uh,
Hmm.
First question,
Hmm.
what's your favorite Asian street food?
Asian street food?
Asian street food, yeah.
Asian street food. I would say, ooh, there's a lot. There's a lot, but I would say would be in Hong Kong, in Mongkok, and it would be the rice rolls.
Rice rolls.
The
Oh yeah,
rice rolls
yeah.
and the sesame sauce,
Oh yeah.
the oyster sauce, yeah, that would be my go-to. That would be my go-to.
And I like how you like we're so specific to like Mongkok. It has to be like in that area because I know there's some stalls like they just specialize in it. That's the only thing they sell,
Yeah.
and you can tell the difference. It's so smooth. Like when you like eat it, it's so you can't get it in Vancouver. Um, yeah, that's one of my favorites too. I like to I don't know the place, but in Hong Kong there's a place in Sam Shui Po.
Hmm.
That's also pretty good as well. But yeah, I feel like also anywhere in Hong Kong that sells rice rolls,
Hmm.
you can't go wrong with it.
No, and I was specific with Mongkok because there's like a street full of like one long street of street food, so you
Mm,
could have a variety.
yes.
So basically, I go there and I would just for an hour or so just walk down the street and just eat a bunch of stuff, and
Yeah.
the
And then
dirtier it is, the better, right?
yeah, and hopefully you have like a tummy cake afterwards. I know which street you're talking about. I don't know, it's
Yeah.
near like the shopping area. But yeah, like it's like blocks of like
Hmm.
street vendors, so good.
Hmm.
How about your favorite bubble tea order? What do you go to?
I honestly, as Asian as I am, I haven't had a bubble tea for a very long time because of just a lot of sugar.
Oh, true.
But if I had to, again, the last one I had, and this was years ago before my metabolism died on me, it would be a simple fresh taro,
Yeah.
milk tea with pearls.
Right.
That would be my go-to.
I like how you have to mention the fresh. Because you know the OG version is the powdered from like Bubble World.
Yeah, the purple stuff. I'm like, no, that's bad. That's just chemicals all in one giant sugar plus chemicals all in one cup, right? So no, I'm like, no, it has
But
to be
back in
fresh.
high school, you don't know better. It's just like that's what everyone got.
No, for sure.
Um, oh, this one's interesting. I got two more.
Mhm.
So growing up,
Yeah.
what did your parents want you to become?
Honestly, they never gave any feedback. They never pressured
Oh,
me to doing anything specific.
okay.
The only thing that they did was put me into Chinese school, math tutoring, like it would be academic related,
Yeah.
but they never say, hey, you had to be a lawyer, you had to be a doctor. They kind of just like you had to be good at school,
Yeah.
but whatever you do, it's up to you.
So when you mentioned to them like you want to do the CFA, like do they even know what that was?
But so no, they didn't know what it was
Yeah.
because, with my parents being in Hong Kong and very traditional, they don't know all these Western designations. So they don't know. And all they had in mind was, hey, after you finish your university degree, you have to do your MBA.
Oh.
Now, there's a lot of MBAs, and it's for me, the reason I went with CFA is much more technical. Like it's much more real work life experience, whereas an MBA is kind of like your undergrad, it's very conceptual. And so that's number one. Number two, when I read that the CFA designation had a high failure rate and not a lot of people have it, I'm like, I got to do this. I want this. I don't want to just be anybody.
Yeah.
Right. So, I spent my 20s getting it, studying really, really hard, and it worked out. But to answer your question, no, they never pressure me, hey, you gotta be in finance, you gotta be a doctor, you gotta be a lawyer. No, they just said, be good at get A's, and I don't care what you be. That's
Hey.
basically the message.
Last question.
Hmm.
So I'm sure you've been to like Asian bakeries where like they sell like different buns.
Yeah.
So if you had to pick one bun, what would it be?
Ooh. Ooh. My go-to. My go-to would be 鸡尾包, the coconut,
Oh, the coconut
the
bun.
coconut, yeah,
Ah, okay.
the coconut.
No, that is good. I love the filling. Sometimes I don't know. I used to love that growing
Mhm.
up, but
Mhm.
then now I feel like whenever I eat it, I like scoop out all the coconut, which defeats the purpose. But it's like, oh, it's too sweet. Like then I scoop it all out. But whatever is remaining,
Yeah.
then I can still taste it. It's like the good ratio for me.
So wait, so you don't eat the bread anymore?
No, I don't eat the coconut inside.
Oh, I see what you mean.
Uh,
Okay.
so I scoop it all out. But of course, like you can't scoop everything out. It's still kind of
Yeah.
stuck around the
Yeah.
edges on the
Yeah.
inside. And
Yeah.
I find that's good enough sweetness for me.
Yeah. It's really sweet, and I don't have it every day. It's one of
Yeah,
those once a week kind of phenomenon.
yeah, good. Okay, well, let's dive into
Yeah,
our
of course.
today. So we when we chatted before this interview, I think
Hmm.
the goal was to kind of look back into
Hmm.
2024 and then also look forward for 2025
Yeah.
in both real estate and the uh, equity market as well, so like the stock
Hmm.
market.
Hmm.
So let's look back first, and then starting with the real estate market.
Yeah.
So let's kind of do like a year in review. So what were the things that stood out in real estate? What are the trends in the market for 2024?
Well, I think what the trend was with interest rates coming down, prices starting to move up. There's always that negative correlation, right? It's cheaper to finance, is so you get people that start to build, you get people that are starting to buy again. But what we notice is that it's very not everything is moving up, right? I From the research, from the analysis, is anything that's less than 2.5 million in BC, where we're at, essentially are still pretty decent. Like the transactions are picking up, but anything more than 2.5, things are not really moving, right? So there's first of all, there's that kind of like disconnect. And then second of all, you would see more so the townhomes, the duplexes, triplexes, that are and single houses, if you can find one below 2.5, those are moving. Whereas the condos, there's this huge supply of them. So they're not moving as quickly as people would have thought.
Mhm. So you would think that would be a surprise then in 2024, where
Mhm.
like condos being at a lower price level, surprisingly, those aren't moving as quickly as something that would be in closer to 2.5.
I would say the surprising fact is how I mean we have to go back three years ago when the condo market was really hard, real estate market was really hard. So pre-sales were going left, right, front, and center. And then in today's time, it's like, okay, now there's an oversupply of them flooding out, whether it's in Toronto or Vancouver, there's a lot of condos coming out, right? But the demand hasn't quite come up to where it should be, I would say. So now there's an oversupply in the condo market.
Right.
Hmm.
So now with interest rates,
Yeah.
beginning of the year, I think it was high, and then I guess second half of the year, rates are coming back down.
Hmm.
How do you think interest rates would affect home buyers and real estate investors, and their decision, no, in 2024 and then and also like kind of moving forward? Do you think more of the buyers will start absorbing the excess supply right now?
Well, so one thing that's interesting, and we see it, is that even though the interest rates have come down quite a bit in Canada, people who wants to buy, they're still waiting.
Mm.
And then you've got people who wants to sell, they're still waiting. So you got two sides that are actually just sitting on the sideline, not moving. Then that's not to say that there's no transactions, but I'm just saying in general, a lot of the sellers and the buyers are on the sideline waiting because they understand that, hey, as rates come down further, for the prices would move higher, right? So for the sellers, they're waiting for the interest rates to come down a little more so that the prices they can sell higher. Whereas the buyers, they're hoping that there's chaos, or if you will, or there's surprises to come out, and then that would kind of shake the market. So then the prices would come down. So you've got this kind of tug of war situation happening, which kind of reduces the amount of transactions, which to what you were saying, the surprise is we didn't see as many transactions because of the interest rate coming down as much as we initially thought.
Mm. So for those who are in the market to buy, one
Hmm.
big question that I get is, oh, should I go like fixed or variable rate?
Hmm.
It's obviously it's a really good question, but it's also very difficult to answer because it it seems like variable is the way to go,
Yeah.
because you hear about the news and like rates are coming down. But
Hmm.
when clients are like, okay, well, what are the rates? And I
Yeah.
quote to them, well, fixed rates are actually like around almost 1% lower than variable rate currently.
Right. Yeah.
And so as much as variable makes sense in a way,
Hmm.
it's tough to be like, oh, I'm going to want variable rate, which is like higher than the fixed rate now.
Yeah.
For those who are kind of deciding, what type of advice would you uh, give to these buyers?
Well, it comes down to personality, right? If you are more of a gambler, if you will, I will use that word, you're comfortable with taking risk, and then therefore you're comfortable with speculating how far the rates would continue to come down. So then, in that sense, a variable rate might make sense for you, right? Whereas many people I've come across, they're very conservative. They want to know exactly by the end of the term, 3 years or 5 years, how much they've paid off in terms of the mortgage. Then a fixed rate would make more sense in that sense. So for me personally, if because I look at the market so frequent, like on a day-to-day basis, and knowing the trend that the rates are coming down, I'm comfortable with taking on a variable rate because where it's at today, yeah, I might be a little bit high at the fixed rate, but I also know that potentially within the next 3 to 5 years, the rates might be lower than where the fixed rate is sitting at. So I'm comfortable with taking that risk.
Mhm. No, taking that risk, I
Mhm.
mean, it's also a calculated risk as well. And for you, you work in one of the big five banks.
Mhm.
I know they do a lot of market research as well. So for the bank that you're with,
Yeah.
what's the prediction and how much further do you think Bank of Canada would lower the rates?
Within the next 12 months, they would see another 1%.
1%. Wow.
1%.
Okay.
That's another 12 months, right? So don't forget that's 12 months time. So
Mhm.
if they move just even 0.25 um each, on a quarterly basis, I think that's realistic. I
Okay.
think that's really, especially with where unemployment is sitting at like 6.5, 6.8% right now. I think they want to when I say they, I mean Bank of Canada would want to lower that to maybe somewhere around 4%-ish, 4 to 5%, and then start inflating the economy again, right? So they need to balance that. At this point, the economy is pretty stagnant, to be quite honest with you, comparing to the US, comparing to anywhere else in the world.
Mhm. Now I want to switch over to the equity market. I
Mhm.
would say it's a slightly different story than the real estate market.
Yes, yes.
So, how would you describe the equity market's performance in 2024?
Extraordinary. Extraordinary. And I mean, if you look at TSX, they've gone up like 22, 23% year to date.
Mm.
And then S&P 500's gone up like 27%, and then Nasdaq's like up 30% for the year to date. So despite having a few dips during the year, like geopolitical tensions, a little bit of worry in terms of the US economy here and there, but despite all that, in the last 11 and a half months, it's been really going up really, really well. So,
And what sectors were the winners in 2024?
well, obviously the Magnificent Seven, like that's leading the way.
Mm.
Um, but I would say I would put them in a separate category because they're just so big, AI focused, so much money. So they're on their own category. But come second would be more your traditional sectors like financial, consumers, healthcare, utilities, like those things are actually broadening out. So those are actually going up as well. And then the the lesser known technology firms would be the third. So you've got the big tech firms and then the lesser known tech firms, and then the middle one are your traditional sectors.
Were there any sectors that were just complete losers, even though the market performed so well?
Well, relatively speaking, like the REITs were not performing well.
Mm.
So I mean, they didn't lose money per se, but then they relatively didn't perform as well compared to all the other industries.
Got it.
Yeah.
So, how about the global events like
Mhm.
inflation or
Yeah.
the wars, geopolitical tensions? How did they affect the equity market in 2024?
So they did have impact for like 2 to 3 weeks time. So there was a dip of like 5 to 8% during the 2 to 3 weeks. However, people, I believe they're more educated now and they understand that, fundamentals are what drives the market, not so much as unfortunate as these things may be, they understand that, okay, well, what's the impact to the economy in the US, right? What's the impact to NVIDIA? Like, what's the impact to Google? What's the impact to JP Morgan? Like, all these things that are happening from a geopolitical tension standpoint, again, is unfortunate, but they also think of it logically. Okay, well, how is it going to hurt JP Morgan down south?
Mhm.
Not really, right? So a lot of people took advantage of the dips that happened and then bought into it and then drove the market even further higher up. So that's what's happened in the last year or so.
Mhm. And in terms of like investors' behavior
Hmm.
and then also like interest rates, like higher interest rates, how has that affected their strategies when it comes to equity investments?
Also, when interest rates starting to move up, um, people were more skeptical, like as rates were starting to move up. So you see a lot of people actually moving out of stocks, the initial reaction, right? So they start moving out of stocks, they put it into cash, and then as GIC savings account rates started moving higher, they're like, oh, look, I can put somewhere safe, conservative, and still get like 5%,
Mhm.
right? So a lot of people were actually moving out of the stock market and putting into cash. And it worked out well in the last 2 to 3 years. However, you also have to consider that, hey, what was inflation like? And then what does tax look like, right? So you deduct inflation, you deduct the taxes. Are you really ahead of the game? And I would say at best, people kind of broke even
Mhm.
after minusing inflation, after minusing taxes. Um, but going forward, now we got to consider, okay, well, what's the game plan, right?
Yeah. No, that's really good. So now let's actually look forward. And I
Mhm.
know everyone wondering, do you have a crystal ball? No one really does, but we can have our bold predictions or best guesses. So what do you see for real estate in 2025?
I would say that in the next year, we're going to continue to see that disconnect, right? In terms of the pricing, right? Anything less than 2.5 would move much quicker than anything above 2.5 million.
Mm,
And I would say that we may see prices to be stagnant because you got two different poles that's happening right now. You've got because of the high interest rate, the financing cost was being so high, so developers weren't building. So leading up to the next 12 to 24 months, there would be somewhat of a restriction in supply. But however, the other force that's pulling the other way is that you've got immigration policies, the new immigration policies that are saying, hey, you have less people coming in, right? So there's less people coming in, there's less demand for homes in general. So prices might be a little bit sticky where they're at. I don't think that we would be seeing a huge increase in the next 12 months or 24 months. And not to mention, then there's all these BC flipping tax rules that are in place that might reduce the amount of transactions that occur. So if you have less transactions, then the prices might not move as much, right? And then people are not forced to sell at this point either. So you've got those things that are kind of, if there's no transactions, prices don't move, and then therefore your prices would be sticky. So I would say stagnant is kind of where we would be sitting for the next 12 months.
So even if people are predicting that interest rates will come down for another, like we mentioned at least 1% in the next 12
Mhm.
months, do you think that will play any impact at all? Like, shouldn't that drive up a little bit more demand?
Well, you would think, right? Like again, there needs to be enough people buying, and there needs to be enough people selling. There needs to be enough transactions to move the price up or down, right? If you have lower transaction volumes than where we saw like 2016, 2017, right? Those were the hot times. The prices are not going to be moving that much quicker. And I kind of touched upon the policies that are in place that kind of prevents people from wanting to really heavily invest into real estate or buy more properties at this point. Because again, if you do the cost analysis as an investor renting it out, what's your yield? Is negative.
Yeah.
So you're really banking on capital gains on a property, which it's pretty evident that federal government doesn't want the house prices to move up that much quicker anymore. They
Mhm.
want it to move up maybe slowly because it's in the best interest because of property taxes as a revenue, but they also don't want it to go up like 10 to 12% every single year because then people here are going to complain and then therefore they lose votes. So there's that factor that we have to consider.
Mhm. And then how about for equity market? So
Mhm.
like you mentioned, 2024 was double digits. I don't have the numbers, but I
Yeah.
remember a negative year, probably maybe COVID year or like a couple years after that where
Mhm.
things drop.
Yeah.
So really we're like all-time highs right now. So is
Mhm.
2025 the year where we might see a collapse or a big correction because it feels like it's overdue?
Well, I would say that it's normal to see a pullback, just because this year's been phenomenal and we've been moving up quite a bit after Trump winning his election. So I think that the market needs to take a breather, and I do feel that we will see more fluctuations going forward. But I don't think that 2025 would be a negative year
Mhm.
based on everything, right? Just simply interest rate cuts means markets economy will do well because people want to. So just based from an economic perspective, and then plus Trump is pro US, right? He's like, hey, pump more oil in the US. I'm going to loosen up other regulations in the financial market. I want more M&As happening. So like he's very pro market and pro economy. So I would feel that the market will still move higher by the end of 2025. However, we will likely see more fluctuations because we've been moving up so much this year that I feel that there needs to be some sort of pullback. Not saying that there's going to be like a 30% correction, but a healthy 5 to 10% dip here and there during the year would be normal, I would say.
Mhm. And no, you mentioned about the Max 7 that
Yeah.
did well in 2024. Do you think these companies will continue to be the driving force in 2025?
They would have to be. And when I say have to be, it's just that they I would say with AI, we're very at the beginning stage. Like we just developed and we're still developing. We haven't even seen the incorporation of AI into people's business, right? Banks or any industries yet. So people are going to start putting AI into their business, and that's another stage, right? So we're at the beginning stage now, and then when corporations starts to implement AI in their business, that's a second stage. So there's still a long way for it to run, and therefore the Magnificent Sevens, particularly NVIDIA, um, AMD, like all these companies, will continue to do well simply because of where we're heading from a technology standpoint.
Mhm. So for those who are heading into 2025 and they're trying to figure out, okay, what to invest in, whether
Mhm,
it's real estate or equities,
mhm.
what would be your advice to them?
What I will say, first of all, is it from a real estate equity perspective, the Asian in me is that if you can buy your own home, buy your own home,
Yeah.
own
Own the land. Own the
own the land, own the
land.
brick, as they would say, if you're in Hong Kong, own a piece of the brick.
Yeah.
Um, but in a serious note, because if it's your primary residence, you have more perks from a tax perspective, right?
Yeah.
Just simply if you make money on the primary residence, you don't pay any tax on it. Obviously, now I think you have to hold it for more than 2 years to avoid the flipping tax. But other than that, you're safe, right?
Mhm.
From an investment perspective, I would personally hold off on investing any more into real estate if that's your second or third or fourth property, just because you don't know what the immigration policies, the impact of it, how that looks like. And there's just so many people kind of sitting on the sidelines waiting to kind of wait for that to unfold and then waiting for the new federal government to come in. There's just a lot of unknowns next year, I would say. So for next year, I would say focus on liquid assets. So whether it's stocks or bonds or um, even in like GICs, keep yourself liquid prepared. And then once we get more clarity, then if it makes sense, right? If it makes sense from a return perspective, from a cash flow perspective, then you may want to consider buying your revenue property.
Mhm. And no, for your advice,
Mhm.
I can understand that you're correct. Like, no, investing in Vancouver, yeah, it's like yield is negative. But
Mhm.
I do have people, looking outside of BC,
Yeah.
um, primarily maybe Calgary. No, they've had that really
Mhm.
hot market in 2024, or maybe other provinces.
Mhm.
What are your thoughts on that? Like, would it still be the case for real estate if other people are looking into other provinces?
Yeah, so for Vancouver, well, I'll say BC in general or in Ontario in general, you're really banking on the fact that the properties grow in value. So you're looking at capital gains. Anywhere else like Alberta, Manitoba, Saskatchewan, you're not going to see that kind of growth. So you're banking on the cash flow that's coming in from rental income, and then you basically are buying a property, holding for 20, 25 years, and then having that rental income pay off your mortgage for you. So the strategy is very different, I would say. If you're buying in anywhere from, like you said, Alberta, Manitoba, Saskatchewan, whatever else is in the middle, uh, you're really just going into the long game, and you're basically just banking on the fact that someone pays off your mortgage in 25 years. If it goes up, great. But that's not your main objective.
Um, yeah, well, we covered quite a lot. Uh, but last question,
Yeah,
is
of course.
there anything that I did not ask or something that you think our listeners should know as we are heading into 2025? What tips or other advice that you would offer to our listeners?
Well, I would say, as I mentioned, be patient, right? There's a lot of changes that's happening next year, right? Like I said, in the US, Trump is coming in, right? I don't think that he's actually going to implement 25% of the tariffs on Canadian goods. Um, I, th- because I feel that he just uses it as a negotiation tool to get what he wants.
Mm.
But wait until he gets into power to see what he is actually all about. And then I believe next year's federal election for Canada as well, right? So let's see what the new government wants to do,
Mm.
right? I mean, they talk a big game right now. Can they deliver? Right? That's the question mark. So patience, having liquidity assets, cash, again, doesn't have to be stocks. If you're really into the real estate game, but I think being patient and looking for opportunities is really important.
Awesome. Thank you so much for your time, Joe.
Oh
And it
no, thank you
was
for
great
having
chatting
me.
with you. All right, take care.
Bye.
Thank you for tuning in. If you enjoyed today's episode, please consider giving us a review and subscribing to our podcast on your favorite platform. Thank you for listening, and we'll see you next time on the Asian Connection Mortgage Podcast.